Morning traders, it's the 11th of January. We are Signal Centre talking ball, taking two. Seems to be some issues with the streaming on TradingView today, so I guess we'll only be doing it to YouTube this morning.
Yeah, yep.
Never mind. Right, okay. Welcome, Steve. Hope you had a good evening. Let's get stuck into the latest headlines, shall we, and what's moving markets over the past 24 hours. And let's start with the US business confidence edging lower. We saw the US NFIB Small Business Confidence Index dip to 89.8 for December from 91.9, which was below the consensus forecast of 91.5 and the lowest reading for 6 months. Although there were further concerns over inflation pressures, fewer companies reported that selling prices had increased and there was a slight easing of supply issues in the labour market. We saw some more hawkish Fed rhetoric. The Fed Governor Bowman stated that inflation is much too high and committed to taking further action while she was looking for compelling signs that inflation had peaked. She added that the Fed needs to hold policy at a sufficiently restrictive level for some time. However, Jay Powell was silent in the comments yesterday. He's stating that the central bank needs to stick to its mandate and there were no direct comments on monetary policy. There had been some concerns that Powell would look to push back against market expectations and reiterate a hawkish policy stance. The lack of commentary helped underpin risk appetite and curbed dollar demand. We've seen fresh speculation from the BoJ overnight. The Finance Ministry office official stated that interest rates will not remain low indefinitely, reinforcing market expectations that there will be at least a limited policy shift once a new bank governor is in place. The US dollar continues to struggle. It attempted to rally at times yesterday, but overall remained on the defensive amid expectations of a turn in Federal Reserve monetary policy and a further decline in inflation in the data this week. So the dollar index closed very close to 7-month lows. And overnight, we've seen some inflation data from Australia. The monthly Australian inflation rate increased to 7.3% for November from 6.9% previously and above the consensus forecast of 7.2%. Okay, that's that for the latest headlines. Steve, let's take a look at some charts. Do you want to kick us off with a look at cryptocurrencies?
Yes, mate. Cool, you whizzed through those, didn't you? Let me just share my screen. No, that's all right. I just wasn't quite expecting that, but let's take a look at the charts. Let me share my screen. Here we go. There we go. Oh, I'm on the indices. Let me get onto cryptos. Bitcoin. Nice day yesterday. Overall, this positive move's continuing, and along with this sort of like nice bounce into the new year, we're sort of like retesting the previous swing high we had between the 13th and the 15th of December, where we formed that evening star formation. That formed the reversal, the resistance barrier, or sort of like the levels of resistance above are between 18,150 and 18,400. We've also got I think that's the 100-day moving average. It is coming in just below the 18,000 mark at 17,933. So you can see it's quite a steady increase and a nice, very solid candle yesterday. The previous candle was a bit of a shooting star candle, so we were a little bit skeptical about whether that could continue. 4-hour chart looking pretty decent, although we formed a couple of doji candles over the last, say, 12 hours. So maybe a slight stall here, but overall looking positive and no sign of it slowing at the moment. The overall picture, remember, the weekly chart remains very negative. So I'm not changing my tune on that until we get a break, probably above the 32,000 level. And I can't see that happening anytime soon. So yeah, resistance ahead, but yeah, nice start to the year for Bitcoin. Taking a look at commodities. Let's take a look at gold first. Gold continued to move higher. And again, on the weekly chart, if we look at that, sorry about that. If we take a look at that, the weekly chart is continuing to push higher. We've got this, we had this sort of this double, triple bottom, maybe you can call it, broke up through there. We're retesting this resistance that we had around about the 1878 level. We're above there. now on the weekly chart. So that's looking pretty good. If we can manage to close above there on a weekly basis, that would be positive indeed. Obviously, the dollar weakness is the main driver of that. We've got this inverse head and shoulders that we pointed out. That measured move target is at 1966. Still got a long way to go to there. And the resistance in between would come in the shape of the 1900 to 1905 area. Yeah, so overall positive. As long as this dollar continues to move lower, the gold will continue to move higher by the looks of things. Silver also positive. It stalled in front of the measured move target at just under $25, but a good day yesterday again. Resistance coming in between 24.55 and 24.92. Golden cross, remember, on the moving averages, so that's a positive, and that lends a hand to the move higher. Since we've broken up through the 200-day moving average in copper, it hasn't slowed down at all. We've now got 4 really strong positive days. We're through the 50% retracement level of Fibonacci retracement of the overall down move of 2022. And again, no sign of it really slowing. And really, this should be a bit sluggish because of the price action that took place in May and June last year. But that's a long time ago now. And again, we're going to get a golden cross on this market in the next few days. So another positive to sort of like start the new year with. Very buoyant mood on these metals and commodities. Looking at oil, the energy markets aren't looking as buoyant, thankfully, because we've all got to pay energy bills, and it always is a bit of a bind. But the reaction, we've posted a higher low on the 5th of Jan, and since then we've seen some candles sort of like breaking higher, sort of retesting these resistance levels. We're below the major moving averages on the daily chart. The 55-day moving average coming in at $80 today, but we're languishing around about the 75 area. Resistance is Friday's high around about 70, just below $77, and support would be the swing low at 72.70. So quite a wide range to consider in oil. But again, a nice little steady build higher. Wednesday today, so we'll have oil inventories out later. So that could give us an indication of exactly what's going on in the West Texas oil market. The Brent crude is trading at a $5 premium, and that's having the same sort of price action, posted a higher low. So looking, like it's trying to form a base, but well below the moving averages. So we've got the 55-day moving average coming in around at $86. We're trading $6 lower than that at the moment, and resistance also at 87, all the way up to 89.25. Support coming in at 77.75, and obviously the swing low at 75.34. So seems to be a positive note this week. Like we said last week, the first week of the year is always a little bit funny, dodgy, whatever. But we're starting to see maybe some investments come in, and sort of like people setting their stalls out for the year. So overall looks quite positive from the commodity perspective. Just take a look at natural gas, because that's trading around this 350 level, which is really significant. Going back to the end of the year, December 21, this major form of support that we've got, and it's challenging to say the least. Yesterday's price action broke and closed below that support level. Today we're off to a slightly better start, so it is going to find it tough to break through this support level. But if it does break through it, it really opens up the downside. So maybe have to look at a shorter term chart just to give us an indication. If you remember, I was trying to buy this, or I did buy it for the gun to head trade on Monday, one of the first live trades we did. It did attempt to move higher, got up to 395 before breaking lower. Now we've stalled around the previous swing low, the 6th of Jan swing low, and again looks to be forming a little bit of a base on the short-term chart. Maybe it'd be a good idea to try this again, because everything else seems to be sort of like trying to form a base. So why shouldn't natural gas? Could have another go here because I wouldn't want to be long if we do continue this break below the 355 level, or the we'll call it 342. So a stop below there. Wouldn't want to keep hold of it below there because there's plenty more on the downside if it does manage to break it. So yeah, that could be an indication for my gun to head trade idea, Joe.
Okay, bit of a head start there then. Okay, let's take a look at FX. So let's start off with the dollar index. We saw the breakdown through support at 103.45. And yesterday we can see that prices stayed below that level. We tried to recapture them, but this is now acting as resistance, as you'd expect from a technical perspective. So we can see prices rallied into that level, formed a doji candle, and today we're doing very much the same. So attempted to move higher early doors, but that's been stopped, and prices are pretty much at the same level that they opened. And I think while this level continues to provide resistance, it does indicate that we may see lower prices on the dollar index. Our next downside target is this 50% fib level, which is at 102.15. If we can close back above this, then we may see prices head towards maybe this kind of region here, 103.87, but certainly the bias remains on the downside here. We were talking about this being a potential ending wedge that would have formed some sort of corrective move higher, which didn't play out. So therefore, we are still looking for lower prices. Let's take a look at Euro US dollar. We can see that's breaking higher from what looks to be some sort of continuation pattern, maybe a bullish flag. We've broken out to the upside. We're making new highs. We're above the high that we posted on the 15th of December, although prices are a little bit muted over the last 24 hours. We posted a doji yesterday, but we're on the front foot today. So it looks set to maybe continue higher, and we're looking for a 50% Fibonacci retracement level here at 109.42 to target on the upside. So we'll keep watch of that, but it looks pretty bullish for now. So expecting higher prices. Let's take a look at cable. Similar kind of situation, although it's not making new highs like Euro US dollar is. So that indicates that there is some weakness still in sterling overall, but it looks to be or looks to have formed some sort of continuation pattern, breaking out of maybe some sort of wedge or pennant formation to the upside. We saw a big bullish candle that was posted last Friday, and prices have continued to move higher since. We've got some resistance to target between 123.45 to 123.02. So it'd be interesting to see what kind of reaction, if any, we get at that level. But maybe we are in the process of forming some larger bottom here on sterling versus the US dollar. Let's take a look at Aussie dollar. That was quite interesting yesterday. It seems to be stalling at resistance. So maybe we're in a position where dollar and the Aussie dollar are kind of battling out at the moment for who is the weaker of the two currencies. We rallied into resistance here, which is a 50% fib level at 69.15. We closed, well, we had a move above it, but closed back below it, indicating a bit of a swing failure there. And we remain below it. So while that remains the case, there is potential maybe for a pullback in prices on this. But of course, it's all going to be dependent on what goes on with the US dollar. So we had the inflation numbers from Australia overnight. So let's keep the currency under a bit of pressure today. Let's take a look at New Zealand dollar. Maybe some sort of continuation pattern has formed here. We have seen a breakout of the channel to the downside, indicating maybe some sort of correction, but maybe there is just a triangle pattern that's formed here, and we are looking to continue higher. We do have major resistance at 64.68. So unless we can get above that on a closing basis, then we may see prices continue to remain choppy and range bound. Anything else having taken my interest? So Aussie CAD was quite interesting because it was rallying into a significant resistance here, posted a swing failure. We saw a move above the previous highs, but then a significant close lower, and prices have remained below that level ever since. So maybe some opportunities for speculation on the short side there. I think that's pretty much it. Let's just take a quick look at dollar yen, shall we, to wrap it up. That continues to trade within this bearish channel. We saw an attempt at moving higher on Friday, but the gains were capped at that resistance of 134.53 and closed back comfortably within that channel. Price is pretty choppy here. We've got some major bands of support between kind of 130.59 to 131.50, so 100 basis points worth of range there. So while we remain within this channel, I think the bias would be for a break to the downside, but of course we need to see further dollar weakness if that is to be the case, which, looking at the dollar index chart, looks highly probable. So that's it for the currencies, unless there's any requests. There's a couple of comments there. Have we got any requests for currencies?
Euro Oz.
Euro Oz. Let's take a look at that, shall we?
Aussie CAD. Did you do that?
Yeah, just did Aussie CAD.
Yeah.
So yeah, Euro Oz looks pretty good. I mean, you're looking at Euro on a standalone basis. That's performing pretty well. And if we look at the Australian dollar on a standalone basis, that's maybe into some resistance here and looking a little weak. So for me on Euro Oz, we've got a double bottom formation, which we can see here that formed between April and August. We saw the neckline here, which was eventually broken. Prices moved to the upside and pulled back and found support at that newly formed support level, which was previously resistant. So we've seen a bit of a move higher, and yet again another pullback to that level. So for me, I think the bias is bullish, providing that prices continue to hold in this kind of band of support that we've got on the chart in this kind of region here. And I'd be looking to buy dips, looking for maybe further Aussie weakness and Euro strength, and ultimately be looking to target a move up to these resistance levels here at 161.73. So yeah, quite like the look of Aussie Euro Oz. That's been one that's been on my radar.
Nice one.
Okay, let's take a look at some indices, shall we?
Yeah. First of all, looking at FTSE, and I'm sort of like taking the chart back quite a long way because we've got this golden cross on the FTSE, and I sort of like wanted to sort of show what sort of potential moves we've had in the past, or moves we've had in the past, to show what the potential is for moving forward. Now we had this lots of sideways price action over the 2018, 2019, and we did get the crossover, the golden cross here, and it was a bit of a messy sideways price action. You'll get the crossovers both ways, and then we got the death cross shortly after. So this was the golden cross here, December 2019, and then we got the death cross March 2020, and that was obviously the start of the pandemic, so there was a good reason for that. I mean, it was definitely a death cross, and we had a really big sell-off, so we had this huge move down that we saw after that type of that sort of like formation. We had the next golden cross we had was December 2020, and we saw this really nice move to the upside, and that was followed by a death cross around the 7th of July 2020. So sorry, 2022, and then we've got this sideways price action, which causes this obviously this sort of like a real volatile period. But this looks a little bit more solid. But are we revisiting this area that we had before? Who knows? You know what I'm like. I'm always looking for some sort of conspiracy or reason to sell the indices, so just ignore me. But we are at resistance that we hit all the way back in July 2019. We've touched that resistance again at 77.30 is the level. For me, we need to get above there. I'll tell you what, let's get rid of this chart so it doesn't look so bearish. Really need to get up above there and a close above there to sort of confirm this. But in the meantime, we've really got to watch price action closely in the month of January. It really will give us a good indication of the trend for the rest of the year. So yeah, at the moment, we're sort of like pushing them limits, pushing it towards the high. So quite positive, no reason to sort of like doubt it. Golden cross, a nice trend up. Maybe it was quite a cute angle, so could do with coming back and retesting some of the resistance levels that we've broken through, but overall quite positive on the FTSE. The DAX, similar sort of price action. It was mid-December when we got the golden cross, and we've sort of reacted really nicely from there. So we're above the resistance, but there's more to come. 14,925, 26, yeah, that's sitting just above. We're off to a sort of like quite a slow start today. We've again quite an acute angle for the rally, so I would expect to see some sort of price action which goes a little bit like this, moves down, retest the previous resistance before moving higher. So you know, we got to sort of like consider, you know, this isn't going to go up in a straight line. It's going to have these sort of pullbacks and opportunities to get in maybe. So again, positive for the DAX, but we are at serious resistance levels. The US counterparts, or the US indices, aren't performing quite as well as the European ones. They've sort of hit their heady heights towards the end of last year. We were up near 35,000 on the Dow, and since then we've been down to 32,500 and bouncing nicely since then. So is this a bit more of a deeper correction? Are we forming a larger top? I mean, overall, the sort of price action since sort of 20th of December has been pretty positive, trying to move higher. We did have a shooting star on Monday, but yesterday's price action negated that almost completely. It was a bullish engulfing candle. Today, again, early days so far, so we've still got a lot to do today, but the resistance coming in, early resistance at 33,930, but posting some sort of nice higher lows on the Dow. Nasdaq remains slightly under pressure, shooting star, but positive day again yesterday, negating that we're facing resistance above at this the neckline from the previous triple top formation, which managed to hit its measured move target nicely. We are below all the moving averages, so there is some rough seas that the bulls face to try and get this back above into sort of like more calm waters. We've got the downward trending resistance line that comes in all the way up 11,858. So there's a long way to go before the Nasdaq sets sail into the open seas. I don't know why I'm sort of referring to the seas. Just a bit, I suppose it just feels a bit choppy.
You're in a pirate or in a Viking, maybe.
And maybe it could be that. I think we're all related to Vikings in some way, shape, or form, or definitely sort of like sea travelers. So downward trend of resistance also in the S&Ps, but that did manage to break it mid-December, but didn't hold above it, didn't close above it. So it was a false break. And since then, we have sort of like found some support at 37.65. And again, yes, Monday's shooting star candle was negated yesterday, and we look to sort of that will look a bit more positive and looks like we're climbing higher. The 200-day moving average coming in just below the 4,000 level at 3,970, and it feels like we're going to continue this nice buoyant mood into the rest of the week. Wednesday's always one of those days for us, which is quite defining, especially when we do our gun-to-head trade ideas or any of our trade ideas. We seem to sort of like get into a little bit of a trend by Wednesday, and hopefully we'll capture some gains, not like we did do yesterday.
No, we didn't. I mean, we do have the CPI number out tomorrow, so that's likely to bring a big wave of volatility with it, and I think that's kind of what the markets may be positioning for now. They won't, I guess, have liked the data that we saw from Australia yesterday, which indicated that inflation was still rising, but we certainly seem to have maybe peaked out in the US numbers, and let's hope we get more confirmation of that tomorrow. Okay, let's take a look at the gun to the head trades then. So this is where Steve and I pick trade ideas live on the video. As if we had a gun to our head, what would we trade right now? The ideas must have stops and targets, and we close them out at 9 p.m. UK time or when the stops or the targets are hit. The ideas are published to our TradingView profile, which is signal_center. You'll be able to find it here. And you'll be able to see all the previous ideas that we've done. As of this year, Steve and I are now placing these on a live account. We've got a £2,000 account that we've started with. We're both risking 1% on each of our trades in the hope that we can turn a profit between now and forever, effectively. So let's hope that we can do that. We did get off to a pretty good start. We was 1 hour up, but yesterday we both got stopped out of our trade. So I was looking at a short-term top on dollar Swiss, probably a bit too aggressive with my stop. And as a result of that, I got stopped out into the level of where the most volume had taken place. I probably should have been a bit cuter with my stop there. And Steve was looking for a retest of a short-term double top on the ASX 200. And if we click play there, we'll see that sadly he was stopped out without making new highs. Okay, so Steve, we've got to go again. You've indicated that maybe natural gas is where you're heading today. Are you sticking with that? You're on mute.
I have to stick with that. No,
you don't have to. No,
I'm not sure.
I've got a trade ready. If you
you do it
for me. Okay.
Yeah.
So sorry, the process for this is now a little bit slower than it used to be because Steve's got to get these trade ideas on in a live environment. But I'm taking a look at Litecoin today. So I don't often look at the cryptocurrencies.
I don't know if we can do Litecoin, Joe.
Oh, what?
Yeah.
What?
I don't think we can do. We haven't got a.
Oh, because it's a UK account. You can't trade them, can you?
No, it's a UK account, so we can't. No, Nope, you've got to look for something else. Unlucky, mate.
All right, well, back over to you then. Well, I'll have a look through something.
That really sort of like, yeah, doesn't do exactly what I want, but I suppose I'll go for it. Yesterday, funny enough as well, no, it wasn't funny. I made a mistake on after we placed the trades, I and accidentally put my same trade on again, so it didn't really help. But we managed to sort of like muddle our way out of it. But yeah, natural gas for me has got the potential for a correction. Everything else that's like priced in dollars seems to be doing okay. So yeah, I'm looking for something like this. A nice little higher low place. Could be potential be a double bottom, but a long way to go yet. We've got to get above that 408 level. And even sort of like this is the sort of area I'll be targeting. So quite a sort of like a wide, quite a chunky target. So I'm going to go for something like this. Let's get the trade on. So create the new order. I'm doing it at market. I want a 1% risk, which comes in at $19.34. So was that give us? We want to put the stop at. I want the stop around about 340, don't I? 340. Targeting a move to 440. How does that look? Yeah, that looks all right. I mean, it says the risk reward on here is that 2.65? Yeah, it's around about that. Risk reward is 2.65. On the screen here, it shows that the risk reward is a lot more. So I don't really quite get that, but I'm going to do it anyway. I'm going to, yeah, buy that. There we go. The risk reward is 2.65. Ignore what this says here. And yeah, that's me getting long on natural gas at current levels. The stop is at just below 340, targeting a move all the way up to 442.
Okay, best of luck, Steve. Right, get your fingers ready because I'm going in on Australian dollar, Canadian dollar.
Aussie CAD, yes, nice.
Yeah, so
You've done this before, Joe, haven't you?
Yeah, I have. Yeah, we looked at this earlier. So reason being, daily chart we can see here, we can see there was a big downtrend. We then seen a reasonable correction into a 78.6% Fibonacci retracement level. We can see here that prices were rejected pretty swiftly at that level on last Wednesday. And since then, we've seen a few kind of long-legged candles, which suggest that this is still acting as resistance and prices are going to maybe struggle to break this down. So looking at it on the intraday charts, this is an hourly chart. We can kind of identify a bit of a range here. We're into another 78.6% level in the very short term. And prices look to be turning lower today. So I want to sell this at market, Steve. And I want to have a stop loss at 93.07.
Okay.
And my target is at 91.19. So the risk reward on this is 3.34.
Okay, it says 3.18 on this.
That's fine. It's probably because there's a couple of ticks out maybe on the entry and the spreads taken into account.
Yeah. So that's got you short around 92.64. Is that right? 92. Yeah, around that level. Target 91.19 and the stop at 93.07. Yeah, that's right.
93.07. Yeah, perfect.
Yeah. Okay. Lovely. That's
excellent.
You're away. You're in. We're in, Joe.
Cool. Okay, we will see how they go. They get automatically closed out at 9 o'clock. We've got our account linked up to an expert advisor that basically closes it out for us without us having to lift a finger. So that's always quite nice and means that the risk can be managed without us having to stare at the screens all day. Okay, data-wise today. So we've got a couple of bits out that we need to be aware of. Steve's already mentioned that we've got the US crude oil inventory numbers, which are due out at 3:30 UK time. And then at midnight, we've got some more inflation data from Australia. Sorry, that was overnight that we've had that. So we've already had that out. So ignore that. then it's all eyes really on tomorrow for this consumer price number, which has been exceedingly market moving of late. Really big ranges as a result of this. So we'll do a bit more of a preview on that tomorrow on what to expect and how maybe to set up ahead of that. Okay, hopefully we'll be back on TradingView tomorrow. Disappointed it wasn't working today. I'll have a play around and see what was going on there. But thanks for those that did join us on YouTube. Have a great day, everybody, and we will be back tomorrow.
Cheers.
Bye-bye.